Big news of the day in terms of the EU Commission's decision to put the kibosh on the Deutsche Boerse and NYSE Euronext merger. Hey there, Jacob. How are you doing?
I'm all right. How are you doing?
Very well. Now, you've written a piece that looks at all the winners and losers in this. Run through a few of them. Who are the guys that are coming out looking good as a result of the end of this, what was one of the biggest merger deals out there?
Well, the people that have resisted, throughout this process, and we're talking about the antitrust process here, a big piece of it was the banks being big customers of the exchanges, and about the idea of the exchanges, running the two biggest European derivative platforms going together and having that combined power over the pricing of trades and so on. So that was a group that you would put in the winner category. I mean, another one you could say came out ahead in this is other exchanges like NASDAQ and like the CME. Not directly affected by this deal per se, but the fact that this would have created a new, bigger global competitor to both of them. CME on the futures side, NASDAQ when it comes to listings, and both of them looking to establish partnerships to other exchanges around the world. This will put them back kind of where they were.
But I think one of the things you point out in your piece, so that they've had an opportunity now, while these two were working at this deal for a year, at least the CME as well, I suppose, to look to their own future and sort of to deal with some new options of their own. Is there a sense that Deutsche Boerse and NYSE Euronext have actually been set back in this sense in terms of competition?
Well, they sure spent a lot of time working on it. They had to canvass, remember, the investors back when NASDAQ and ICE were launching a rival offer for the NYSE. There was a lot of lobbying of the investors that went on through that. They had to lobby the investors to get shareholder approval for the deal even after that proposal went away. And they had to turn their attention to the regulators for the last 6 months. It's been a real intensive process, not just in Europe, in the U.S., where they did get clearance. So they've been spending a lot of time on all of this, and at the same time they've been selling the deal to their customers. So yeah, they have been spending a lot of time, a lot of energy on it. That time, NASDAQ has been out there. They've done a couple of small acquisitions on the technology front to expand their offering beyond just trading. The CME's in the works, setting up a new grain exchange in the Ukraine. They're rolling out a new trading platform. Yeah, with the Brazilian exchange. So, they've been busy.
A window of opportunity given to them, it seems. What about some of the losers here? Obviously, the two exchanges themselves, but anybody else coming out looking kind of bad in this?
Well, there's potential for the banks to be losers as well, because remember they're facing increased capital requirements over there in Europe. I mean. This deal would have saved them, the exchange's estimated €3 billion in collateral costs by putting the two derivatives platforms together. They wouldn't have had to put up as much margin.
Less margin, right.
Yeah, so that wasn't lost on the banks, but ultimately they saw the threat on the pricing as a bigger deal. The issuers, you could put them in the loser camp perhaps. The end idea was that when they had this broader global platform, that if you were listing shares in Frankfurt, you'd have an easier time listing them in the U.S. as well if you wanted to go that route, or Paris, and any number of other markets they might have added.
Right. But I mean, obviously, really the most important question is what about the investors? I mean, when the EU makes a decision like this, when the Commission rules that it is counter to competition interests, it's investors that they care about. Are investors better served, would they have been better served by a larger behemoth like this, or by the competition that would exist? Is that clear at this stage?
Well, the jury was sort of out on that the whole time. If you're talking about the individual investor, I mean, a lot of these products that the EU is fixated on are interest rate futures that really pertain to the banks and to insurance companies and so on. But when, you talk about stock trading, the idea that they could have merged nearly, all the big European platforms under one parent, I mean, there are efficiencies that come along with that, merged technology and so on. I mean, that was a big part of the deal from the company's perspective, but whether or not that would have trickled down and meant fee savings to, the retail trader, it's kind of hard to say. The brokers that we talked to were sort of, the jury was out on that.
Right, the little guys seem to be sort of far removed from this equation.